When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast Markets. I got Chip Nellinger back here for the first podcast of 2024. Chip, how you doing, buddy?
Good. Happy New Year, Casey.
Yeah, you too, man. Survived the holidays there. Got to see all your family and all that stuff.
Yeah, pretty quiet. We were a little slowed down with some COVID in the family right ahead of Christmas, but we ended up getting all the Christmases in by New Year's, and yeah, it was a good way to kind of close the year out and reflect a little bit and slow down, and now we're ready to roll for the new year.
Right on. Well, let's talk a little bit about 23 and kind of get a recap there. 23 was a crazy year. You started out with a lot of really high commodity prices first in the year, and it kind of tapered down to where it gave all that back, and then it kind of went back to where we started shortly after COVID. A lot of that stuff again was driven by the COVID delays and stuff we saw out there. But there's been a lot of in 23 saw a lot of weather-based premium get put in and taken off throughout the year, more so than I can remember. Is volatility, as we saw as much volatility around the world when it came to the weather situation. So Chip, I guess kind of reflect a little bit on 23 here and kind of what you thought of it and kind of how you think that's going to affect going into 24.
Yeah, I think that was a good summary, right? A lot of volatility. We're kind of transitioning, coming off of 2 or 3 years here. We've had shrinking global stocks of grain, particularly corn and beans, right? We've had a couple little weather flare-ups here, 2 or 3 major droughts, really 3 back-to-back major droughts in the southern hemisphere. One in Argentina that we came off of last year. So that really has kind of thrown the world a little bit out of the cycle that we're used to and caused some of this volatility. In fact, you looked at a bean chart, a long-term bean chart over the last year. You know, we had probably just off of memory here, 4, maybe 5 swings in beans, both lower and higher, that were at least $1, and a couple of those were $2 or more. And of course, we're kind of in the middle of one right now, unfortunately, to the downside. And so, you know, I think that the take home is we're kind of in this transition. 23 is kind of like a transition phase into, you know, tight stocks of global grain supplies to maybe one now where the market's thinking, okay, we're going to start building those supplies into 24 and 25. And so, you know, a lot of volatility surrounding some of the weather issues that have flared up. Brazil probably, you know, arguably into in early 23, November, December, and here now in January, one of their worst droughts ever. Really, that goes back to about September is when that started for them. But, you know, they don't plant beans that early. And then by the time they started planting, their, you know, late fall and into December was one of the worst droughts in Brazil's history, and saw some volatility to the upside. And, you know, they've gotten some recent rains and taken a little bit of that weather premium out. So 23 was more of a transition year in my mind, you know, between tight stocks and what the market's perception is of building, increasing stocks into 24. Saw a lot of volatility, saw a lot of geopolitical stuff going on. You know, I mean,
Oh yeah,
the take home for me too, you had the Ukraine war still in the third year, I guess.
Going into the third year,
You had the whole Israel Gaza situation, some Red Sea issues, and on top of that, you've got this whole inflationary environment, and then late in the year, the Federal Reserve coming out saying, "Hey, we're done increasing rates. It's been fun. We're going to start decreasing them now." And so that was a bit of a wild card to the market, and there's no one that had on their dance card on January 1st of 2023 that the U.S. stock market would close at all-time highs, right? So that's another head scratcher there that no one had that on their playlist, and yet here we are, ended the year at all-time highs in the stock market and well off of recent highs in our bond yields and interest rates. So it was a wild one in 23, and I think people are looking for some quietness in 24, but I think it's still going to be pretty volatile and pretty hard to manage the unexpected swings that we're likely to see in 24.
Yeah, you brought up a good point there when you look at the interest rates and how that little bit of news that came from the Fed about, okay, we're going to potentially lower interest rates by 3 times, right? Now you read some reports and some news and it's happening for sure, and then you read some other reports and it's like, well, they said they might lower them 3 times. The stock market took that and ran, and they are betting on the come like no one's business when it comes to what interest rates are going to look like. As you look at a few things, let's talk about energy markets here a little bit. As you look at what's going on there, a lot of bullish information has been thrown around out there. You look at the Iran situation that we're in right now. They are doing their best to get in a war with us, it feels like, and slap us around a little bit, and rightly so. We haven't done much to stop them from doing that. But I guess as you look at that situation, Chip, what are your thoughts on the energy market right now?
Yeah, there's a head scratcher as well, right? That kind of dovetails right into this equity market discussion we had, right? Then no one would have expected all-time highs in equities. If I would have told you, hey, we still have a major war conflict going on between Russia and Ukraine, and week-to-week fluctuations in the Black Sea, whether there's ships going in or out of that, or whether it's a halt, and arguably, the biggest major war in the Middle East between, Palestine and Hamas and Israel that we've had in 30, 40 years, maybe longer, that we'd have several, aircraft carriers and warships in the Red Sea and being fired upon by Iran, and Iran sending their own warships into the Red Sea. And if I would have told you that and gave you the play ahead of time, you would have thought crude oil would have been $110, $120 a barrel. And it ended the year in 23 struggling to stay above $70 a barrel, and spent plenty of time under 70 in the 60s, low to mid 60s. And so, again, a head scratcher there. Part of that is this deflationary environment, like you mentioned. When the Federal Reserve made that big shift in policy, it was a real wild card, because for 18 months they said, no, higher for longer, higher for longer. That was the mantra, right? Higher for longer on interest rates. And then all of a sudden, out of the blue, they're like, not higher for longer, lower quicker. And that sucked a lot of money out of index funds and this inflation trade. And it put some of that money that were long commodities and hard assets back into the stock market. So I think it's just kind of a rotation thing. Now, the thing in 24 is, I don't know how it's going to turn out. Nobody does. With this Iran situation, to me, the easy answer is it's going to escalate. Probably back to your point that we don't seem to carry a big enough stick anymore for anybody to be, quite frankly, worried about what we think or say or do. They just do what they want. We've lost our status in the world as the big dog with the big stick. And so my assumption is that we could easily see escalation in the Middle East, in the Red Sea, and have crude oil really put a rally in. It's set up now where the speculative money is at the lowest levels we've seen for a couple, 2-3 years in the energy markets, probably since COVID, right? When we went negative crude oil, if you remember that, in the middle of COVID.
Yeah.
So we're set up now to kind of explode the energy markets back to the upside if there is continuing problems in this Middle East situation. And I don't know why there wouldn't be, right? These things don't just end overnight,
Right.
and they probably escalate before there is some final resolution here. So
Yeah.
that I think is a wild card, and that could certainly affect the grain markets as well. If you break out, if you start seeing crude oil creep north of 80, I think it could be a quick run to 90 or above. Those are big ifs right now, but I think that that could be maybe a shock to the system, and that would throw a monkey wrench in this whole interest rate situation too, right? If you see a big jump up in crude oil and energy prices, that's going to put a little bit of a wrench in this inflation, taming the inflation beast too.
Yeah. Yeah. It's like you said, man. There's as much geopolitical stuff going on right now, if not more, than there was in 23. So it's going to be interesting to see. Now you kind of let's come back over here to the grains for a minute. So a couple things I think I'm going to pay attention to in 24. The Ukraine-Russia thing, that war has hit a stalemate. Neither side can kind of go any further than what they're doing. I've read several reports, and you take them for what they're worth, but there's a lot of muttering out there that perhaps Putin is ready to talk about what it might look like to what is surrender or not surrender, but a parting of ways might look like between Russia and Ukraine. You look at Ukrainian presidents losing favor in Ukraine right now, so there could be some opening there to where you could see some more possibility of grain to come in and out. Now, of course, they got to grow it, and that's where they're struggling to do right now. But even on the Russia side, you're starting to see maybe an opportunity. There could be more stuff come out of the Black Sea area. You struggled this fall to get a good, solid wheat crop planted, and now we're looking at some winter kill situations that could be coming down the pike. I will say the plains have been getting a lot more moisture and snow in the way of snow than what we've seen in the past. I know some snow is falling right now in central Kansas. Just talked to my mom, and they're supposed to get 4 to 6 inches of snow ahead of this big cold front that's coming through. It's supposed to be pretty amazing cold front coming through here. So I guess as you're looking at the wheat market, Chip, there's a lot of, again, bullish stuff kind of coming at it. I guess, what are your thoughts there, and where do you see that headed?
Yeah, again, I think it says to me a lot more uncertainty, right? We're going to have here on the 12th of January, a week from today, the January WASDE report, and with that we get some wheat planted acreage number that's expected to be way down from a year ago. You mentioned the cold weather here, potential winter kill problems. You also have a big deep freeze coming in Ukraine and Central Europe. And so I think you've seen a little bit of risk premium be put back in the wheat market here the last couple of days. But, again, just wild uncertainty, right, with how that's going to end up. You can see the writing on the wall, right? You can see for some time the narrative has changed, as far as the Ukraine-Russia war. It's out of favor. We're done, I guess, grifting, hundreds of billions of dollars through there. I guess we've sucked the machine dry, and so there's no more money to be squeezed out of it. So logically, there's going to be likely in 24 some sort of agreement, right? It probably means Russia takes the territory that they initially wanted, and Ukraine begins a long rebuild process. How does that factor into production is anyone's guess. Part of what we've had hanging over the wheat market for a long time is Russia had a big crop, and they're probably about through with putting that out on the market. Probably on the downside of the supplies they have, but now it's about new crop supplies and production, and so that's going to be something that drives this. The commodity funds have maintained a pretty large short position in the wheat market for the better part of 18 months now. We're down near multi-year lows, and so all you need is one little spark out there to I guess spur them out of that short position, and you could have a buck and a half rally in wheat very easily. Now you need a spark to do that, right? And so far we haven't seen that, but there's a lot of things on the horizon that could do that. And I just geopolitically, I just can't remember a time in my career, which is 30 plus years. There may be a couple times with as much uncertainty for short periods of time, but this amount of uncertainty on multiple fronts, like you were talking about, I don't ever remember that in my lifetime. Something very quietly that happened too over this the New Year's holiday was that kind of didn't get a lot of attention. Was the Chinese president gave a New Year's address, and he said in 2024 we are going to be reunified with Taiwan, and meaning, hey, we're going to walk in and finally take them back because China thinks Taiwan is theirs, and Taiwan never left, type of a deal. So that more than anything might have been what kind of kicked off some of our early in the first week of the year. That's a whole nother wild card. Not only do you have the Middle East, the Ukraine situation, China's rattling the sabers pretty aggressively as well, it seems like.
Yeah, he sat across from Biden when he was here last time and said, "Hey, just hope I have support on the Taiwan thing," and just like nonchalantly said it like that, and the media just kind of completely just didn't even pay any attention. It just blows my mind about that. So.
It is mind-boggling. So how that all sifts out with commodity prices, I don't know. It says to me, don't get locked into, don't get perma-bear or perma-bull syndrome. There's going to be wild swings in these markets, even if our crops continue to be large. It seems like quietly under the radar too. I think it's psychological too. We don't even, in my opinion, the corn and the bean market haven't really begun to get serious about what the Brazil crop size prospects are, and because I think some of it goes back to our growing season last year in 23, right? And people are saying it's the same thing, we were hot and dry in June and July. We didn't have much rain in August. We finally started getting some late rains, and look at our crop. It was, big. Some guys had record. You can't hurt these crops anymore. I think they're saying the same thing about Brazil, and I'm not so sure that's the case, right? They have different soil. There's 700 million bushel swings currently from low to high on their bean crop estimates. And, I just think that could still come back to really add some volatility to the bean market. Right now, the bean market's on multiple month lows, and assuming everything's great and there's enough beans in the southern hemisphere, I think that's a little bit presumptuous. Right now, the corn market is hovering near multi-month and contract lows under the assumption everything's gonna be fine with their second crop corn. They haven't even planted yet, and I think that's a little bit silly to think that. So the weather on top of all this geopolitical stuff, it's just there's so many unknowns. So I think we're going to continue to have opportunities, big swings. There's going to be days like today, probably from a farmer producer standpoint, that it feels like we're going to zero. There's probably going to be days and weeks where we think, we're going sky high, and it means there's going to be opportunity, but we better sharpen the pencil and be ready for the volatility. I don't think it's going away, and probably getting worse before it gets better.
Yeah.
And that's not a bad thing, right? Everybody says they shy away from volatility, myself included, but we don't want corn sitting there in a 12-cent range all year either. We want, the swings give you opportunities to be competitive and chances at profitability.
For sure. Absolutely. All right, man. So you hit on the hog thing. I think that's the last thing I want to talk about. But I guess as you look at the hog market, there's been some glimmer of hope, but then you got this last thing here where the hog market just got smacked up here pretty good at the end of the year. I guess looking at the hog market in this first quarter, do you see some opportunities coming that will allow the hog market to have an opportunity to be profitable again?
Well, I think the first quarter is going to be tough. So a couple things at play there. We're feeding them really big, and we've got more of them than expected, right? The last two quarterly hogs and pigs reports, the pigs per litter are essentially record. Now we're taking some sows out of production, but the problem is, that's probably towards the back end of the market. And in the first quarter, we're really going to be struggling with a big supply. I think the fear initially was back to this China thing. Are they done buying pork? They're arguably maybe the second biggest, maybe the biggest now buyer of U.S. pork for the last couple of years. And so if we get into this geopolitical, they, get into, taking over Taiwan type of a deal, that's not going to be friendly to any of our ag markets, especially beans and pork. The old pork and bean trade, right? Old floor trader, he loved the pork and bean trade. But so I think there are some hopes longer term. Unfortunately, I'm reading too that more states, unfortunately, the one I'm in right now, Illinois, is wanting to go more towards this California type environment where, it just isn't really palatable for profitably raising hogs. The kind of the non-confinement type, farrowing crates that have a lot more space, and there's just so many problems with that. There's more and more states that are starting to come online and want to do this, which my hope was that the craziness stopped at California, it stopped at the border there, but it seems to be spreading eastward, and so that's not really necessarily a good environment for the hog market. So I think we've got some chances, but these summer months that are back up above 90 now, there's such a head start to where we're sitting, in the front month February contract. I don't know. I know corn's come down. I know meal's come down. I think on, bounces here into the first quarter on the deferreds, we have to get more aggressive than what we normally are used to. Normally, you got a lot of upside into, summer time frame on those. I'm a little bit worried it's going to be a weird year in the hog market. So, mid to upper 90s, probably need respected in these summer month hogs if you see those here going forward the next couple of months.
Right on. All right, Chip, good place to stop for this podcast. Look forward to working with you furthermore here in 2024, and best of luck to you guys over at Blue Reef as 2024 starts to unfold.
Well, Casey, I know that you've got a lot going on in 24, so let's cheers to that, and wishing you continued success. And I'm sure we'll talk more in the 24, and they're going to be exciting things to come on the markets for sure.
That's definitely for sure. So, Chip, appreciate you being on. Folks want to reach out to you and get more information about what you're doing over at Blue Reef Agri-Marketing. What's the best way to do that?
Yeah, best way is just call our main office number. That's 309-550-7213. We, as always, love to chat with you about what you're doing with your risk management plan and how you might be able to add an extra set of eyes and ears and improve the execution of that.
Right on. Well, Chip, I appreciate it, and we will talk to you again next time.
Sounds good. Thanks, Casey.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast, and check me out on Snapchat and TikTok at Moving Iron Podcast. Go see the video version of this over at YouTube, which is the Moving Iron Podcast YouTube channel, and see everything Moving Iron related at Moving Iron Podcast, which I should have a new website up here, I hope soon. So I keep saying that, but we'll find out when it gets there. So with that, I'm Casey Seymour with Chip Nellinger. It's going to be some iron, folks. Out.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years, you'll find us here.